Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Please subscribe to the channel and also please do like and share and leave your suggestions in the comment section. Today I will discuss various case studies related to the internal promotion examination for banks. Today marks part 9 of my Path to the Corner Office series. Parts 1 through 8 have already been published and are available for interested individuals to explore. Bank promotion exams are the pathway for banking professionals to pursue career growth and advancement within the banking sector. Each public sector bank organizes these exams internally, allowing individuals to demonstrate their skills, secure higher positions, and benefit from increased responsibilities and rewards. Bank promotion exams are organized by banks and financial institutions to evaluate, identify, and promote deserving employees to higher roles within the bank's hierarchy. These exams are usually structured to assess candidates' knowledge, skills, and competencies in various aspects of banking operations, management, finance, and customer service. While the format of the bank promotion exam may differ from one bank to another, it typically consists of written tests and interviews. The Bank of India has announced the promotion examination notification for the transition from clerical cadre to the general banking officers cadre, junior management grade scale 1. Additionally, promotions for officers moving from their current scale to a higher scale have also been released. I am sharing some important case studies that may assist eligible candidates. HDFC Bank Digital Payment Ecosystem Digital Transformation. Scenario: with India's push toward a cashless economy, HDFC Bank aimed to increase digital payments usage among its customer base, particularly in Tier 2 and Tier 3 cities. Challenges: low digital literacy, resistance to change from traditional cash transactions, and cyber security concerns. Strategies: partnerships with local merchants, collaborated with small businesses to set up UPI and QR based payments, offered incentives for using digital payment modes. Customer education programs held workshops on digital payment safety, particularly in semi-urban and rural areas, to boost digital literacy. Security measures introduced two-factor authentication and biometric verification to enhance trust in digital payments. Results: digital transactions surged by 40% in targeted areas, and customer engagement with mobile and internet banking increased, so showcasing the effectiveness of both education and technology integration. State Bank of India Sustainable Finance and Green Bonds Sustainability. Scenario: in response to growing environmental awareness and government directives, State Bank of India introduced sustainable finance options, including green bonds. Challenges: developing green finance expertise, ensuring regulatory compliance, and attracting environmentally conscious investors. Strategies: green bond issuance. State Bank of India launched green bonds aimed at funding projects in renewable energy, waste management, and clean transportation. Collaboration with environmental consultants. Partnered with experts to evaluate projects based on environmental impact. Investor awareness campaigns educated investors on green bonds and environmental benefits to encourage adoption. Results: State Bank of India raised substantial funds from green bonds, positioning itself as a leader in sustainable finance. The success of this initiative encouraged other banks in India to explore green financing. Kotak Mahindra Bank Digital Wealth Management for Millennials. Scenario: recognize the growing wealth of the millennial demographic. Kotak Mahindra Bank sought to provide digital investment solutions suited to their preferences. Challenges: adapting traditional wealth management models to a tech-savvy audience and simplifying investment products. Strategies: app-based investment platform launched a user-friendly mobile app allowing millennial investors to access mutual funds, ETFs, and automated investment advices. Education content: integrated explainer videos and financial literacy content tailored for first-time investors. Micro investing options: offered investments with low minimum amounts, making wealth management accessible to younger customers. Results: over 50% of new investors in Kotak's wealth management platform were under the age of 35, demonstrating successful market penetration. Axis Bank: voice banking through AI-driven virtual assistant. Scenario: with an increase in digital banking, Axis Bank saw an opportunity to create a voice-enabled virtual assistant to improve customer service and accessibility. Challenges: maintaining customer data privacy, ensuring language adaptability, and integrating the assistant with various banking services. Strategies: AI-powered virtual assistant developed an AI assistant capable of understanding multiple Indian languages to assist customers in checking balances, paying bills, and transferring funds. Voice authentication: integrated voice biometrics to enhance security, allowing transactions via voice commands. Continuous learnings: updated the assistant regularly based on customer feedback to improve accuracy and responsiveness. Results: customer satisfaction scores increased significantly as users reported quicker resolution of queries and improved convenience, with a 30% rise in mobile app usage for routine transactions. ICICI Bank Financial Literacy Program for Rural Women. Scenario: ICICI Bank noticed a low participation of rural women in formal banking and aimed to improve financial literacy among this demographic. Challenges: language barriers, cultural factors, and lack of exposure to banking. Strategies: dedicated financial literacy camps, conducted workshops in local languages, focusing on basic banking, savings, and mobile banking usage. Simplified loan products: designed low interest micro loans tailored for women entrepreneurs in rural areas with flexible repayment options. Women-led community banking: established small groups where women could collectively save and receive micro loans. Results: financial inclusion among rural women improved significantly, with an increase in new savings accounts and micro loans taken by women entrepreneurs, boosting local economic development. Yes Bank Blockchain for Trade Finance. Scenario: Yes Bank leveraged blockchain technology to streamline trade finance processes, addressing inefficiencies in documentation and approval delays. Challenges: high transaction time due to manual paperwork, risk of fraud, and lack of transparency. Strategies: blockchain-enabled trade finance platform developed a secure blockchain platform to track and verify trade documents, reducing delays and improving data integrity. Partnerships with corporates: collaborated with corporates in sectors like automotive and electronics, where quick access to trade finance is crucial. Digital signatures: enable digital signing and verification of documents, significantly reducing the turnaround time for trade transactions. Results: transaction times were reduced by over 50%. The bank saw a 40% reduction in fraud incidents due to enhanced transparency, making the case for blockchain's effectiveness in trade finance. Punjab National Bank crisis management in fraud incidents. Scenario: following a significant fraud incident, PNB had to restore its reputation and improve its risk management framework. Challenges: managing customer and investor trust, strengthening internal controls, and adhering to regulatory standards. Strategies: enhanced risk management framework, implemented a multi-layered control system with real-time monitoring and strict compliance protocols. Employee training on fraud detection, conducted fraud awareness programs and training sessions for employees at all levels. Public transparency, regular updates to customers and stakeholders regarding the bank's corrective actions to rebuild trust. Results: Punjab National Bank managed to stabilize its customer base and attract new deposits by the following fiscal year, reflecting improved risk management and public transparency. RBL Bank financial products for the gig economy. Scenario: with the growth of gig economy workers, RBL Bank identified a need to provide banking services suited to freelancers and independent contractors. Challenges: income instability among gig workers, lack of formal credit histories, and traditional product unsuitability. Strategies: flexible savings and loan products, created savings accounts with no minimum balance requirements and loans with flexible repayment options. Income-based credit assessment used alternative credit assessment methods such as cash flows analysis instead of relying solely on traditional credit scores. Health insurance plans offered health and accident insurance specifically designed for gig workers, addressing their unique coverage needs. Results: RBL saw a significant rise in gig economy customers, positioning itself as a bank that innovates for emerging workforce segments, which further attracted positive media attention. DBS Bank branchless banking model in India. Scenario: DBS Bank implemented a branchless banking strategy in India, relying heavily on digital platforms to serve a tech-savvy customer base. Challenges: building trust without physical branches, maintaining customer service quality, and adapting to India's regulatory environment. Strategies: digital-only banking platform launched the DigiBank app with a fully digital KYC process and AI-enabled customer support. Partnering with local fintechs, collaborated with fintech companies to expand reach and offer localized solutions like UPI payments and microloans. Educational campaigns, created digital marketing campaigns educating customers on branchless banking benefits and digital security. Results: DBS's customer base grew rapidly, especially among younger, tech-oriented demographics, and they became one of the first foreign banks to find significant success in branchless banking in India. Bank of India financial inclusion through Jan Dhan accounts. Scenario: in line with the Pradhan Mantri Jan Dhan Yojana, Bank of India aimed to expand banking access to underserved rural populations. Challenges: reaching remote areas, low financial literacy, and a lack of physical branches in rural regions. Strategies: mobile banking units deployed mobile vans equipped with ATMs and banking representatives to bring banking to rural areas. Simplified KYC for quick account opening allowed customers to open accounts with minimal documentation, simplifying the onboarding process. Financial literacy drives conducted awareness campaigns explaining the benefits of savings accounts, insurance, and subsidies provided through Jan Dhan accounts. Results: over a million new accounts were opened, giving many rural customers their first access to banking services, which boosted financial inclusion and allowed the bank to serve a broader customer base. ICICI Bank Limited versus Santi Devi Sharma 2008. Topic: recovery of loans and harassment. Summary: this case dealt with ICICI Bank's recovery process, where the Supreme Court emphasized the importance of ethical recovery practices and customer rights. It established guidelines for banks to follow in recovery procedures, emphasizing non-coercive, lawful methods. Central Bank of India versus Ravindra and others 2001. Topic: interest compounding and bank liability. Summary: this case clarified when banks can compound interest on loans and emphasized transparency with customers regarding interest calculations. It held safe policies on fair interest practices, ensuring that banks inform customers about applicable interest rates. Reserve Bank of India versus Peerless General Finance and Investment Company Limited, 1987. Topic: RBI's regulatory authority. Summary: this case underscored RBI's powers to regulate banks and NBFCs. It reinforced RBI's role in overseeing interest rates, deposit schemes, and investment policies, making it essential for banks to comply strictly with RBI regulations. Indian Bank Association (IBA) versus Devkola Consultancy Service, 2004. Topic: check bouncing cases. Summary: this case brought attention to the liability of banks in check bouncing cases. It emphasized the duties of banks in handling checks accurately, influencing the way banks address errors related to check processing. Union Bank of India versus Khader International Construction and others, 2001. Topic: loan disbursement and responsibility. Summary: this case highlighted the need for banks to follow strict due diligence before disbursing loans. The judgment brought out the responsibility of banks to assess risk accurately, preventing fraudulent loans activities. Mardia Chemicals Limited versus Union of India, 2004. Topic: SARFAESI Act provisions. Summary: this case challenged certain provisions of the SARFAESI Act, which empowers banks to recover non-performing assets without court intervention. The Supreme Court upheld the Act with minor amendments, empowering banks to take quicker actions against defaulters while safeguarding borrowers' rights. Canara Bank versus NG Subaraya Sethi, 1998. Topic: trust versus bank relationship. Summary: this case addressed the fiduciary relationship between banks and customers, focusing on trust issues in bank deposit relationships. It reinforced the idea that banks must maintain confidentiality and transparency with customers. Standard Chartered Bank versus Directorate of Enforcement, 2006. Topic: foreign exchange management. Summary: this case discussed the role of banks in foreign exchange transactions, reinforcing compliance with the Foreign Exchange Management Act (FEMA). It stressed the responsibility of banks to prevent illegal currency transactions. Tata Motors Finance Limited versus Joginder Singh and another, 2015. Topic: repossession and consumer protection. Summary: this case involved the repossession of vehicles due to non-payment of loans, where the court highlighted the importance of fair and lawful repossession methods, stressing customer protection to asset repossession cases. RBI versus Sahara India Financial Corporation, 2012. Topic: regulation of non-banking financial companies (NBFCs). Summary: this case reinforced RBI's role in regulating NBFCs, particularly concerning deposit mobilization. It clarified that NBFCs must follow RBI guidelines and emphasized stricter norms to protect investor interests. Thank you very much for your patience.